Good evening and welcome to Bizworld. I'm Adrian Seet. Malaysia and the United Kingdom have discussed efforts to deepen bilateral integration for better economic partnerships, particularly in new growth areas identified in Malaysia's national investment aspirations. Senior International Trade and Industry Minister Datuk Sri Muhammad Azmin Ali, in a statement, urged the UK industries to build more partnerships with local institutes, which would further strengthen the local investment ecosystem and provide vast opportunities for both Malaysia and the UK. This includes creating more high-skilled and high-income jobs to support the operations. Datuk Sri Azmin also stressed that it will not only strengthen bilateral relations but also intensify strategic development. Malaysia's Industrial Production Index (IPI) increased 5.8% in December 2021 from a year earlier, following growth in the manufacturing and electricity sector. The expansion was contributed by the increment of 8.4% in manufacturing index and 3.7% in electricity index, while mining index recorded a decline of 2.5%. For the full year, the country's cumulative 2021 IPI reading expanded 7.4% from a year earlier, following a contraction of 4.2%. The IPI for the fourth quarter 2021 grew 6.9% as compared to the same period of the previous year. Malaysian Aviation Group MAG is bullish to break even as early as the third quarter of 2023, having been able to drive positive cash flows since last October and having a 2 billion ringgit cash balance at hand, driven by its cargo and MRO business. Although bullish, its group CEO, Captain Isham Ismail, is cautious with the fluctuations in currency exchange rates and fuel costs, plus COVID-19 infections worldwide.
That is our main concern, fuel and forex instability. Yes, we do have, we have injected it in our worst case scenario. But to be honest, candidly, the trajectory of the fuel and forex, especially fuel, has gone surpassed our budget. So that's our concern. That's something that as a business we have to handle, we have to tackle, right? It's either by compensating more revenue, top-line revenue, or finding other ways and means to reduce our cost further. Mind you that Malaysia Aviation Group today are very efficient in cost base.
MAG's cost structure, meanwhile, improved more than 50% compared to 2019. The national carrier currently sits on 9.8 billion ringgit liability from 25.7 billion ringgit liability pre-COVID. In the past 22 months, cargo business and MRO were strong revenue contributors, with cargo business top-line revenue more than doubled to 3 million ringgit versus 1.4 billion ringgit in 2019. Hartalega Holdings posted a net profit of 259 million ringgit in its third financial quarter ended December 31st, 2021. It was a 74% decline over the 1 billion ringgit net profit recorded in the same quarter in 2020. Its CEO, Kwan Man Leong, said the average selling price of gloves has continued to decline from its peak in the first half of the financial year due to lower sales demand and increased supply from both major and new glove manufacturers. Buyers have also continued to adjust their inventories as a result of the lower selling price. Moving forward, Hartalega will continue to focus on its strategic long-term expansion plans to cater for structural organic step-up in global demand for gloves. And that's all the time we have for Bizworld. I'm Adrian Seet. Thank you for watching and keep tuning in to TV3.